All right, everybody, welcome back to another rendition of Manny Moolah. Today we're going to be talking about the dividend income I received for the month of February. We are now here on the 2nd or 3rd of March. Some good results. Although I will highlight, as we have kind of moved more from a dividend-specific portfolio to more of a balanced growth dividendish portfolio, you're obviously going to see some drop off in the income, which some of you guys might be like, dislike, unsub. I don't like this guy anymore. Never did. Don't know why I followed him in the first place, which, to be very frank, is what's kind of been happening with the channel. But it is regardless of everything. Let's just hop right into that. We get a little bit of stream session as I transfer over to this over here. Don't mind me. I think I was just watching The Boys or something. So that's why I have Amazon up. So let's just zoom in a little bit. And for those of you guys that are quick with the eyes, you could probably already see month of February made about $1,300 in options income coupled with dividend income. Dividend income alone was $851. Now that is a drop from last year of $1,100 or so dollars. And the main things that I can tell you are I divested out of XYLD, which was a smaller position. It wasn't that big. I divested out of Caterpillar, and I think I moved that into, a position in part SPY and part Shell, if I remember correctly. So that was a hit as well. That was like $120 a quarter or something like that for that. And then XYLD, you'll see it's like 80 or something bucks as well. So that accounts for about $200 right there. And there's probably some one-offs that I'm missing, which we can talk a little bit about in just a moment. So the first payment that I received was Devo. That's a monthly payment, paid me about $155. I already actually got my March payment as well for $153, but Devo hanging in there, 155. I need to update this forecast because it looks like it's about 162 is my forecast, and we've been trailing a little bit with that. Jeppy as well, 337 for the monthly payout for Jeppy. It's a little bit lower than normal. I'll probably just double check where we were kind of at. We were kind of hovering in the 350 to 450 range last year. I'm not actively adding to this position, so be able to just kind of keep it at that 382 for the time being for now, and we'll kind of see if we need to adjust it for the forecasting piece going forward. Then we have realty income. This one's pretty cool. $119 a month in reoccurring, and they just gave like a 4% uplift or 2% uplift or something like that. So the reinvested dividends, that gives me another 40 cents or so, coupled with the dividend raise, it gets me to about $122 a month run rate, which would be really cool. Last year, this time, we were at $113. So it's cool to be able to see that month over month dividend payment, like I said, just from going from January to the reinvestment that we had, made the February payment go from $118.73 to $119.19. And we see something similar once we get to Stag Industrial, where we went from $80.57 to $81.40. And you can see it's done rather well with this throughout. So you've gone from like $77.73 to like $79, and every month or so you get another 25-30 cents out of it on a monthly basis. So it's pretty cool because you think about that increasing 30 cents, you're like, it's only 30 cents a month, but every time you reinvest you get another $3 a year. It's pretty cool, just to be able to say, yeah, every month I'm getting a $3 raise. And if you add that for multiple things, like you add that for realty income, you're getting a couple dollar raise. You're adding for Stag, and you have, say, 20 positions that are all dividend focused, then every month or so you're adding like another $100-$150 a month. I was just doing some research. $20,000, you were to reinvest that for the year and you get a 4% dividend yield, I mean, you're talking about another $800 a year. That's pretty cool. Pays for some bills, So nothing with that. XYLG, we did not get a dividend payment. XYLG is a 50-50 covered call and just normal S&P 500 fund. That did not pay me. It did pay me, I believe, yesterday. So I need to go ahead and add that in there. Not sure if we're expecting 2 payments for March there or not. So we will see. Jeppy dropped from 121 to $95 in the Roth IRA. So once again, this was kind of hovering in the $100 to $120 range all of last year. So before I drop this going forward, I'll probably just wait a month or two because I anticipate it might come back up, especially since volatility has kind of come back a little bit. Let's see, nothing too much. These are a lot of old positions. I need to get rid of some of these and shrink the table a little bit, because I do not have nearly this many positions anymore. I've gotten rid of. Cardone Capital did a good jump as well, to kind of note. It was kind of hanging out mid last year at the $56 a month. Now we're up to $62.50 a month. So that's pretty cool to see a little bit of an increase there. And these personal savings accounts, they do throw off $1 or $2 here or there, but I'm just too lazy to log into the account. And the same thing with this PG. I know for a fact that I had a dividend here in February timeframe, but I'm just too lazy. I think I have to go to the mailbox and find out what my account number is, and God knows what, be able to check in on it. So it's like $4. It's not really worth it for me. So that, coupled with the covered calls are pretty cool. It's mostly to SPY, a few other small positions. I didn't go too crazy with them. Like I said, I try to generally keep, 95% of profit, 5 delta on the upside, or way out of the money, like almost close to 2 standard deviations out of the money. Just because I'm not going to try to get rid of some of these golden geese. Amazon, for example, don't really want to let that go at like $110 where you'd be writing, a 30 delta cover call. Just doesn't make sense. So I'd rather take less profit, and hold that thing for the long term. And that's generally what I'm doing. So, if I'm able to replicate that for all of 2023, get $300-400 a month, it'll be an extra $3,600-4,800 for the year. I've done way more covered calls in the past, and I've also sold a lot of puts in the past, but I just don't have the capital right now. Maybe actually this end of this month in March, I'll have a little bit more extra capital where I might be able to start writing some puts again. But for now, most of it's all invested. So very small amount of YouTube income. It was like hovering on the 83.50 mark. This was like 2 days ago, so I never went back and updated it. It's probably $85-86, so it won't drastically change things, but that's where you get to the $1,300. Next month, though, will be a lot of fun. It'll be $2,700. I don't think I've had close to $2,700 in like 6 months. Looks like it's probably about September timeframe since the last time I had that good of a month. So it'll be kind of cool, and I think a lot of that has to do with the BHP payment. So I'm curious if they've announced that yet. But generally speaking, BHP does a pretty good job of paying out a dividend. Going to the actual dividend growth, as I alluded to already, 2023 is down February year over year, from where were we? 851 from $1,100. So we're down about 24% or so. And a lot of that has to do with the fact that I'm moving some of these higher yielding positions that I was really focused on kind of getting into. It's not that I dislike those positions, they're just not right for me, right? And so while I think that they're great, and I think that, say, the Jeppies of the world or the Divas of the world are great, which I don't think I've sold any of that per se, but the XYLDs and stuff like that, where they were kind of fringe positions, I'm really trying to consolidate that and get that into SPY. I'd really like to get 1,000 share position in SPY. I'm up to like 340 or something like that. So within the next couple of years, I'd rather, instead of having, some XYLDs giving me some dividends, I'd rather be writing some covered calls on 10 contracts of SPY and, getting that dividend. And I think I've probably broken $600 a quarter in dividend income from SPY. So about $2,400 a year. I'd like to get that to 10. Like, that'd be really cool. $10,000 a quarter from SPY. But I think in reality, it's probably going to be closer to the $2,500 a quarter here pretty soon, with the next year or two. So that'd be like 10 grand in a year, rather than 10 grand a quarter. But you need like 2.5 mil or 2 mil or something, to be able to, no, probably not that much. You probably need to get 10 grand a quarter. Yeah, like 2.5 mil to get 10 grand a quarter from SPY. So I'm nowhere near that. I'd like to get close to 350,000, 400,000 in SPY for the shorter term. That probably get me close to the 1,000 share mark if we got to stay at this price, but probably end up being 500,000 alone in SPY, just knowing that the market's probably going to go up by the time I get into it. So that being said, even next month with going from 2022 to 2023, we're seeing 18% likelihood going down. We had $3,300, almost $3,400 in dividend income alone in last March. A lot of that, I think, had to do with great BHP payments. A lot of it also had to do with just investing in high yielding companies. So unfortunately, I think we're kind of going to be troughing off, right? Like, I'm not really expecting to wholesale and any big companies or anything like that at the moment. And to be very honest, it could be that you see something that's more speculative in the portfolio moon, and you end up having me consolidate that. Say like an Alibaba or something like that just absolutely skyrockets, which I have a very small position in, that I could sell those positions and continue to move them into SPY. You actually would get a dividend, right? So, I'm really trying to just consider how many positions I have, how much actual ability I have to influence those positions and actually spend time on focusing on those things. Or is it something where I could focus my time elsewhere to make more capital come into the portfolio and just invest it in the SPY to kind of keep it up with the investments of everything? So anyway, curious what you guys have to think in the comment section down below. Portfolio yield has decreased drastically in the portfolio, so I believe a lot of you guys are probably disliking unsubbing. You probably think I'm just selling my positions as a whole. I'm only continuing to add capital. I haven't really taken any capital out. Any money that I used to buy the most recent property, I used from my own money. So it wasn't like I sold a bunch of dividend stocks or anything like that. That's the reason why, yields are down or anything like that. No, this is a conscious decision to understand where in 20 years the portfolio will probably be. And will eventually I get back to the place where I'm only focusing on dividends? Maybe. But for now, I'm trying to get to that probably like $8 to $10 million mark. And I'm probably not going to get there by investing in dividend only sort of companies like QYLD and option ETFs like QYLD, RYLD, XYLD. I need to focus on companies that I can invest in for the long term that'll continue to grow 8 to 10% a year, and maybe some companies that might have some hyper growth in the next 5 to 10 years. And so that's kind of how I've organized the portfolio, sprinkled in with a little bit of dividend income. And so that's just the way the land is. So I hope this finds this video finds you guys well, and I hope you guys enjoy it. Let me know what you guys think in the comment section down below, and I'll talk to you guys on the next video. Cheers.